I were just being immersed all of the good disclaimers that we've done on Selfwealth Live over the years, and we're saying to ourselves, wouldn't we just love to go over more disclaimers? And we got just caught in each other's disclaimer eyes, so to speak. So thank you for everyone who is in the chat. I can see everyone here. Will Owen be Owen tonight, says CP, with an Owen spelt with an AI in it. Ben Doodle, g'day. Paul, is this going to be a pre-recorded session since Owen and the team are traveling, Deepak? No, but Deepak, you can ask your questions live. But there may be some pre-recorded sessions in the next few weeks as we go on the road again for more events around the country. So, Deepak, you've also said, is Owen going to be 4 minutes late like last time? No, I was actually 7 minutes, so I do apologize. So tonight we've got a bit of an AI session. I am actually not here at all. It's just a replica of me in an AI form. So I've been replicated through machine learning, and here I am, not really. But seriously, tonight we're going to be talking about artificial intelligence. We're going to be talking about how you can invest in it, whether you're an ETF investor or a stock market individual stock kind of guy or gal. I know there are some of us here in the Rask community, at least 82% of people invest in both ETFs and direct shares, which is quite interesting. That's actually probably a bit higher than I thought it would be. So people are investing in more than just ETFs or just shares, which is quite interesting. And that's definitely gone up from about 71% 2 years ago. So we'll be covering ETFs. We'll be covering individual shares. So that means we need to get to tonight's joke. Tonight's joke is brought to you by Dad Says Jokes. In an interview, the boss asked me, "Do you have any experience?" I told him, "Yes, this is my 20th interview." And that's the joke for this week. What a cracker it is. Everyone rejoice. Look at that joke. And I'll just resize my screen while I'm here just to make it so we've got the maximum amount of joke on there. If you haven't already seen this very important message with a finger pointing to a button, I shall leave you with this one right here. There you are. It says subscribe. I think it's, I don't know. English isn't my first language, but it looks like a good one there. 10 out of 10, says CP. Thank you. So here's the thing that you've come for this evening, which is the disclaimer. Selfwealth Live videos contain general financial advice only. That means the information has not taken into account your needs, goals, or objectives. So you should not act on the information until you've spoken to a licensed and trusted financial planner. I put the trusted bit in because the regulator says you only have to say licensed. Owen is the founder and director of the Rask Group, which is a corporate authorized representative number 1280930 of Waddle Partners AFSL 383169. You can refer to our Financial Services Guide or FSG for more information. That is on the website. And I can see here I got a 9.5575. Pretty good. Finally, the views expressed in the live streams are solely those of myself and or our guests and do not necessarily reflect the views or opinions of Selfwealth. You will see a little moniker in the chat from Selfwealth. Stuart's given me an 8, by the way. Thank you, mate. Paul's given me a 7. These are pretty good numbers, actually. The jokes lately, I think, have been hitting. We've been hitting, so thank you. If you do see the Selfwealth moniker in the chat, that is Rob Marfell from Selfwealth. Rob is in the chat. He's dropping maybe some wisdom in there too. I'm actually getting him on the podcast tomorrow, so watch out, everyone. Is everyone getting a little echo, says Crisp? I don't know. I'll just check my audio for you there, Crisp. It looks like it's okay, and I've got echo cancellation on my end. 8 out of 7. And is this... that's a very good question. Is that an AI-generated pic of Owen? This one right here. Now, this was only the second time I have worn a suit jacket in 2 years. The other time was when a friend of mine invited me to the races. I actually bought this jacket for the races, hence the thing in the pocket there. So I was very serious, and our producer at Rask, a photographer and videographer, she said, give me a serious face, 10 out of 10. I didn't know what that meant, so I just did non-smiling but semi-serious. And then what she did, once she took the photos and took them back, she actually used AI to automatically enhance all the images and take away any blemishes. So Michael said the audio is all fine on his end. Thanks, Michael. So that is what you get. Now, how fun is this? Another disclaimer from Selfwealth. I'll take this as read, and there you have it. Selfwealth's disclaimer. Same thing, general advice only. Now, we've got a special announcement. I did allude to something last week. I made an illusion. Maybe not an illusion. I alluded to something last week. I alluded to a renovation that is happening at Selfwealth. And there's a photo of me stuck onto someone's renovation nightmare in the background. Looks like it might be in Europe, given all the concrete. But we are going on a bit of a journey with Selfwealth Live, and it is evolving. And so, what we are going to see over the next few weeks is we're going to see basically nothing change except for the name. So, it will become Rask Live from next week. Same place, same time, Rask Live, brought to you by Selfwealth. So, it's exactly the same thing in exactly the same place, but it's just going to have a new name. And that's really all there is to it. However, I do have a video, and I won't bore you to death with the full video. I'll just play a bit of a thing here that I've got pre-recorded, and it will roll from about a few seconds away. And what will basically happen is I'll join you on the other side, and it just gives you a quick overview. Maybe we won't watch the whole thing. You can watch it some other time, but here's what we're expecting. Welcome to Rask Live, Australia's premier investing channel. Every week, we go live with some of Australia's best and brightest thinkers on investing, on saving money, on running companies, on basically any financial topic that is important to you and creating wealth. Whether you're investing in shares, global stocks, property, crypto, commodities, alternative assets, you name it, we've got it. Every week, we'll go live with an expert, or the Rask team and myself will host you and answer your questions 60 minutes at least every week, every Wednesday, live. Now, I'll leave it there because it goes on to say quite a few other things, and let's be honest, time is money, especially when I'm late. So we will just be renaming it, basically. You might see a few different guests that you haven't seen before, but we will be showing you and showcasing some really interesting new guests to the show. So I saw you spruiking another different podcast. What gives? Anthony, nothing is changing. So nothing is changing. In effect, really, it's just the name change. So behind the scenes, if I give you one big change, is that you'll be able to get Selfwealth on Selfwealth Live on social media. So it's just a renaming of the show. I always wanted to stream the live show across every channel that I could possibly put it through, because I think what we do here each and every week is probably the best investment education. I'm very biased. I think it's the best investment education content in the country. And in fact, Rob and the team at Selfwealth were up for an industry award, which I think they should have won, for the content that we produce here for free every week. And so I just want to get the shows into the hands of more people. So basically the name change means that it's still in the same place. We've got, instead of Selfwealth Live, we've got Rask Live brought to you by Selfwealth. So that's really it. So we should, Rob doing an interview of Owen in one of these live sessions. We should do that. So Rob is actually going to be on a podcast tomorrow. I will share the recording with you in a few weeks' time. But Rob is going to be behind the mic, and it's going to be a bit of fun because he hasn't really shown his face. He's kind of this, I think he called it the other day, an admin reveal. It's going to be like a YouTube admin reveal, and we're going to talk about all things Selfwealth, industry, what we've seen in markets over the past 2 years. So that'll be out soon. So thoughts on China collapse, says Chef Circle. I don't have any big insight other than property. But I don't have predictive ability of what's going to happen in a foreign economy, and I have very little predictive ability of what exactly is going to happen in Australia. What I would say is we've been calling for like the demise of China for a very long time, and property development and all this type of thing. I don't have the answer, to be honest. So is Rob a dentist, says Stuart? It could be part-time. Not a face for radio. I was saying before, not a face for radio. Okay, so here we go. Let's jump down. Here are some of the upcoming guests who will most likely be featured on the Selfwealth Live, Rask Live in the future. So many of you will know the faces on this page, just to highlight some of them. Scott's been on the show before. Scott Phillips from the Motley Fool, Chief Investment Officer. Ryan down here is also from the Motley Fool. He's the Director of Research. Brian Feroldi, huge educational guest that I'm hoping we can get out of the United States. One of the most followed people on the internet when it comes to investment and that type of thing, and education. Kerry Craig, JP Morgan Asset Management, Tom Milner of BKI, Washington H. Soul Pattinson. So many great guests. Mel Brown, so many great guests we've already got lined up. And this is before we even get to the CEOs. So there's going to be a heap of different speakers. There's Dr. Andrew Deremuth, of course, who also goes by the name Drew Meredith. Some of you may know. So these guys will all be featuring on the show in coming weeks. Of course, my co-host, Kate Campbell, there. So that's in coming weeks. Tonight, I want to start talking about AI. So AI or not. Recently, I interviewed, and you saw a little snippet a moment ago, a guy called Steve Sammartino. Steve came on the podcast and he recorded about a 2-hour podcast with me, one of the longer ones. We've gone for 3 hours before. Goon, you said, I hope Rask Live can do more small caps company deep dives. Goon, yeah, we'll be doing all of that. Because, by the way, guys, I forgot to say on this slide, my prompt going to be, are there any guests that you want us to bring back onto the show? Any guests at all? Can you please put them in the chat now? Because I think we'll be able to get them. And the second thing that I wanted to introduce you to is like anything that you want us to talk about, like topics, like through us, through Rob and I and the entire network that we have, we basically have the ability to ask anyone a question. Because the audience has got bigger now, because you guys have rewarded us with your loyalty, we can basically get anyone on the show if we're persistent enough. And so that means that then you can get the best answers to your questions. So if there are topics, questions, guests, put them all on. CP, great one. You've said Michael Kemp. Guest number 1 from Jason was Warren Buffett. I'll try. This maybe in Australia, I'll maybe wind it back a bit. But CP, I'm actually having lunch with Michael Kemp tomorrow. So watch this space. Michael Kemp, of course, was the barefoot analyst, as Rob put it once. He was the kind of lead researcher behind the Barefoot Investor Blueprint service. So Phil Town, Alex, I've never heard of that person. Phil Town, you want to give me some context there? Maybe I've missed that. Okay, so let's get going. Steve is one of the guests that I've invited back on the show, by the way, on Rask Live. So I'd love to have him back on. To AI to not. So a few weeks ago, he came on the show and he said this really profound statement. He goes, eventually this, meaning AI, will enter our body. So meaning things like Neuralink, if you've seen Neuralink, if you've seen Neuralink before, so this is an Elon Musk company. If you've seen this type of thing where it connects to your brain through implanted devices, so you can have basically a smart brain. If we see that, according to Steve, eventually he believes that we will have this form of artificial intelligence inside our brain. And he says that will result in a split in our species. I wrote series. Let's go species. Where we will have Luddite humans and neo-humans. Luddite humans will say things like, I'm not going to be technologically advanced. I wrote this horribly. I'm going to stay the way I am. And neo-humans will say something like, I'm going to embrace that technology. If we merge with technology, it will give us a fighting chance, Steve said, a fighting chance against a super AI, basically. And so Steve's point is basically boiling down to this. Eventually, this will morph into us as humans, and we will have a choice to make, whether we become enhanced type of people or we end up kind of just not doing that and kind of living off the farm and being in an organic style world. I can see some good names on here. Mauricio, you asked for Morgan Housel. I am in talks with Morgan Housel, through a third party to try and get him onto one of the shows. So I'm just going to write some of these down, guys, so I don't forget them. Morgan Housel, Claude Walker, Peter Thornhill. Claude will definitely come back on. I love him. Tim Harcourt, that's a good one. What else we got here? Guy Spear would love that. Who else have we got? Topic suggestion: buy, hold, sell from Rare. So Rare, here's an interesting one. What I was thinking of doing is having quote unquote an investing club. So an investing club where we have 2 or 3 regular experts who come on the show every month and they give us their best idea or their best whatever each and every month, the same people, so we can test them over time. We can all grill them. Maybe that's something. Bill Ackman would love that. I don't think Bill would be too enthused, but we can try. Okay, so I'll go back and remember some of these. Anyway, so basically what we'll have is we'll have humans split in two. We'll have people that have the enablement and people that don't. And what we are seeing right now in the world, the reason I spend a bit of time talking about this is we are seeing this exact thing happen with companies. So we are seeing some companies adopt AI and some companies not. I mean, they all want to, but maybe they don't have the ability to do that. So I want to give you a really quick example. I'm here. Well, we saw an example before in Monique's photo of me. This was taken last week. So Monique took the photo, then she ran some AI over it. She didn't need to run the AI over the top of it, but she did. So that's an example of someone using AI in a very simple way to enhance productivity. Now, there are other companies right now that are doing something very similar like this, and I'll get to them in just a moment. But a really simple example is just this thing down the bottom right-hand corner. I'm going to move my screen out of the way. So you get this thing. I'm using Canva, the Australian technology company, to do this presentation. And you can see down the bottom here. So we can just brainstorm AI suggestions. So we can write your first draft and we can see what happens. So let's try it out. Let's go. Let's see if I can do this. Write a summary of how to invest in AI. And let's see what happens. So now what we're going to see, okay, let's have a look. Let's see what it says for us. I'll get Steve out of the way and I'll get my stuff out of the way, and let's zoom in a bit here. So it says, investing in AI can be a smart move for those looking to diversify their portfolio. What you've got to do is research the market, choose your investment approach, understand the risks, stay up to date. What a great piece of investment advice that is. I don't know if ChatGPT or Canva has a general financial services license, a general advice license, but we'll see. So anyway, we can do that, right? And that can improve the, I guess, the outcomes for me. I could use that instead of writing all this content myself, and I could do it that way. Obviously, there are some severe limitations to doing it like that. But if you notice here in the corner, you'll see that there's a little, it looks like a little crown. I'll see if I can zoom in on that. You'll see that there's a little crown. And what this basically means is I pay for the premium version of Canva. So I have to pay extra. If I'm just a free user of Canva, I have to pay extra to use this. And you'll discover in a moment that I think that that's actually one of the best ways to play the rise of AI is actually not to invest in the quote unquote AI companies, but to invest in the companies that benefit from it. So there are multiple ways to play the game. Number one, you can use a diversified ETF, and I'll show you how to do that. You can use a thematic ETF, and we don't need the side thing anymore. You can use the Lynch Levi model. That's what I'm calling it. You can use the guerrilla game approach, or you can just hope and pray. And hope and pray might be like something like this. This is how you know you're doing hope and pray. My mate said, ... or I got a good tip about ... That's how you know it's probably the hope and pray method, because you really don't do any research and there's no strategy around it. So let's continue on. So diversify. Actually, I just saw a joke there. I know it's a joke, and Alan Joyce is the brunt of it. Martin, you said Alan Joyce has some time to fill now. Well, it probably does after that Qantas departure. Retiring early was how everyone put it, which was quite interesting. Oh, here we go. Mickey Mouse, I think it is. Peter Vandermeed made from Brainchip. What's going on with their chips? Good question. We'll get to that in a second. Troy Castles, I've heard that name before. Craig David. Tuny. We'll try and get Craig David, Jim Cramer. I like all of these. Well, we could even try and get Monique. Okay, so here we can see diversified ETFs. If you own the S&P 500 ETF from iShares, this one, if you own this in your portfolio, let's just get this up inside Selfwealth. Let's do a cheeky login roll here. You're going to see that I don't do 2FA. One sec. So accept risk and continue. Yep, sure. So if you invest in this ETF inside Selfwealth, then you already invest in AI. And this is a really important thing to understand, because what I'm telling you is that basically you don't need to do anything different. Just by being an investor in the stock market, you're already exposed to benefiting from AI. You don't need to go and research anything fancy. You've got it in your portfolio. And how have you got it? Well, I'll explain in a little bit more depth in just a moment how you've got it. But we can see that in the top 10 holdings here, what's inside the ETF. So here we can see Apple, which uses its Siri voice assistant, Microsoft, which has the partnership with OpenAI, the creator of ChatGPT, Amazon, which uses heaps of machine learning across its network, NVIDIA, which is obviously the graphics processing unit developer. It's the world leader in GPUs. Google, which owns Google Bard and Search, both machine learning and AI enabled. Tesla, which is the business leading the world in self-driving technology, and also just home automation is probably the big frontier that people don't know about. Meta Platforms, which is Facebook. Has anyone noticed that Facebook's results have been really good lately? So if we just jump in here quickly, has anyone noticed that Facebook has rebounded and its results have been really good? Well, a lot of that, so it's up, 300% in 8 months. The reason why is because these social media giants are now able to use AI technology to serve you better Instagram, Facebook, and WhatsApp content, and you're more likely to stay on the platform. So these businesses are taking a picks and shovels approach to AI and benefiting in a huge way. Berkshire Hathaway, not really an AI company. ExxonMobil, not really AI, but probably could use it. The second thing, so if you already own IVV, hands up if you already own IVV or VGS, the other one. If you already own this, then you're an investor in AI. You don't even know it. Francis, you've said bring back Gaurav Sodhi, the Lavisa goat. Yeah, well, Gaurav is one that we can definitely bring back. I asked Google Bard how to invest in during a recession, says Mike. It was helpful. So what I've noticed, Mike, just on that really quickly, I'll come back to me real quick. What I've noticed is when you ask ChatGPT or Google Bard for investing insights, it's very rarely accurate. So it can give you generalized language model responses. But what I find is when I say, hey, what's the long-term return of Apple? It comes up with some kind of nonsense answer. It looks right, but it's often wrong. It's, in fact, most of the time it's wrong. And it's the same thing when I ask it for, like, how is this ETF correlated to that ETF, thinking that it could maybe do some of my work for me. Almost always wrong. So I just be very mindful of that. Jared, you've said BGBL, yep. NDQ, Joe Blogs, yep. Chris, you've got IVV, yep. Matthew, you put your hand up. Cool. So RBTZ is an ETF from our friends at BetaShares, who we had on the show last week, in fact, for the last month. And it just invests, as it says on the tin, in global robotics and artificial intelligence. And it's got a few different names in here, but the way it basically goes about it is it's not just focused on what we know as AI. Most of us know now that what we're talking about when we say AI is actually language models. So kind of like generative AI. But businesses have been using something that looks and smells and sounds like AI for quite a few years, maybe 10 years. But the new generation are quite different. So companies like Intuitive Surgical, which create this. So this is the Intuitive Surgical Da Vinci Robotic Surgical System. So what this... So, Joe, you've said AI, a big misunderstanding is that AI is a search platform. Yes, there are a few. I agree with you, Joe. There's obviously that it's a search platform. Another one is that it is, like I said before, just a way to get simple question and answer solutions. So many things like that. But anyway, this machine is not to your point, Joe, probably not considered AI, but it uses machine learning and over time looks and feels and smells like an AI, but it's probably not really. But basically, what this machine does is a doctor can sit inside it, so say like right here, and then operate on a person in surgery anywhere in the world. Super sensitive, super effective product that's used right around the world. And the company that makes it is this one, Intuitive Surgical, right here. So it's not necessarily a play on AI, it's more of automation, but you get all that in this ETF. There is another ETF that many of you will be familiar with. If you don't want to buy individual shares, you can just go and buy the Fang ETF, which just invests in the top 10 US stocks, basically. Top 10 tech stocks is how I would describe it. So you've got NVIDIA, Alphabet or Google, Amazon, etc. You've got all those names that I just ran through, and you've basically got it here in one investment. And this ETF has performed exceptionally well over the past 12 months. Let's get it up. I'm going to insert a very strong disclaimer here that past performance is not indicative of future performance, because I don't think in all my years of investing, I've seen an ETF do this. It's nearly doubled in a year. So that's not normal for ETF investors. I want to be very clear. And that's why a lot of people think that this ETF is firmly in the satellite allocation in your portfolio, not in the core. And I'd probably agree. So this ETF has performed exceptionally well because it's been driven by NVIDIA, because it's been driven by Tesla and Apple, but also things like Meta or Facebook that has grown very well in a recent time. So, Joe, you said interview some of those hard hit stock CEOs like NXL, which is, I'm going to try and remember off the top of my head. I can't remember exactly what it is, or EML. So you might remember, Joe Blogs, that we had Tom Cregan on the Rask Network not too long ago. You can go back and find that. But I'm actually trying to get, so you asked for not a big gun, Joe, but I'm actually trying to get Sam Huppert, the CEO and co-founder of Pro Medicus, to come on and answer our questions. So that would be huge. I didn't have his face on the thing up here because he hasn't confirmed yet. But Sam, if you're watching, we all want you to come on and tell us about how amazing the company is that you've built, because it is amazing. So we've got a few like that. I'm hoping to get David Dicker from Dicker Data, and a bunch of others, maybe even the guys from Cobram Estates who create the olive oil that I hope is in your kitchen because it is beautiful. So heaps of different people like that. Darwin, apart from Fang, do thematics historically outperform index ETFs? No, Darwin. The answer is no. They do not historically outperform. So what we find is that thematic style ETFs, if I could sum it up, Tarwin, the most dangerous time to buy a thematic ETF is when it first launches. Let me just I'm going to get my Mr. Squiggle just real quickly and show you something. And it's not going to be perfectly scientific, so please bear with me. But typically what we see over time is we see like a hype cycle. So what we'll see is like the idea of this new theme, let's call it AI, comes out, it goes like this, it goes like this, and then it goes like this, right? So basically what we see is like peak trend here. This is like when you see most of the Google searches for exactly what the heck is AI. But basically what happens is it takes about, I'm going to guess here. I'm going to guess, right? I'm going to say this, 3 to 4 months at least to bring an ETF to the market. Now, maybe that's not quite that big. Maybe it's more like that. But it takes about that time, maybe longer, to bring an ETF from the idea being formed, like, hey, we should start an ETF for this, and it actually launching, it can take a long time. And so basically what happens is when all of the companies are rallying up, the ETF provider is scrambling in the background to try and make an ETF that helps people capture it. But then oftentimes it launches during this period. And this is just a very generalized thing I'm going to put out there. Looks like my CRIP holding, says Rob. So what happens is typically the ETF launches here, right? And that has the effect of if anyone bought from this period through to like this period, it looks like a loss for them. Now, this is a very generalized thing. Sometimes this doesn't happen, right? So sometimes this doesn't happen, but sometimes it does. So what you've got to be mindful of, if when you are buying this thing, is it a genuine, proper thematic that you can see yourself holding for years? Suzanne, you're saying from Lara, Victoria, you're watching. Thank you. Welcome from Lara. But what we find is that some ETFs don't do this and they just kind of go like this. And that's fine. But the period, if I could put a bow on this for you, Tarwin, is that this period from here right over to here can be as long as 5 years, right? It can be that long. It can be 3 years. It can be shorter. But we're measuring this in years. So most people who buy here get really disenfranchised. They're like, whoa, AI, woohoo. And then the AI stocks start to fall because reality sets in. And then they think, oh no. And then they sell down here and they just lock in their loss. And so we see this with some thematic ETFs. Now, this is a very generalized statement. It's not all. Some thematic ETFs come out of the gates and they're exceptional, right? They're really good. Like some of them are really good, but some of them do not. And on average, they tend to underperform. So I just want to air that to you now. Some of them are good. A lot of them don't do that well straight out of the gates, but over time, a lot of them do. Is there a way to calculate the value of an ETF? Yes, you can do it, CP. I won't bore you to death, but there's a very simple method. It's not accurate, but it's not accurate all the time, but it's called DDM. That's a D. That's right. I got my pen license, but I didn't get my Canva license. My teacher would not be happy with me drawing that D. But that is a D. It's called a dividend discount model. You can basically value the income stream from the investment. So if the ETF is the basket and it pays dividends out, you can value those dividends to determine what it's worth. So that's it. I will now put away Mr. Squiggle. So let's just recap. You can, if you already are invested in a passive broad market ETF, chances are that has US stocks in it in particular, you've got AI. Congratulations. You can use a thematic style ETF to get focus in your satellite. Remember, your satellite is the smaller part. So remember, I said other strategies. Let's draw our attention to this quote from Peter Lynch, who is, where is he? This guy right here, the guy who wrote One Up on Wall Street, great book. He said, during the gold rush, most would-be miners lost money, but people who sold them picks, shovels, tents, and blue jeans, Levi Strauss, made a nice profit. So what he's basically saying here is that during the gold rush, when everyone was running around with their shovels and they were trying to, go into the creeks and see if there's any gold, a lot of them would lose money because they really just didn't really think about who was actually making money. And a really good example of this is if you go back to the dot-com boom and bust of the late 90s, you would have come across a company called Pets.com. Now, Pets.com was a company that was right at the time when everything had .com on the end of it in the stock market, just because it sounded great. Now, if you read this highlighted bit here, which I shared in an email yesterday, Pets.com had around 570,000 customers before it shut down. The stock had fallen from its IPO of $11 in 2000 to 19 cents the day of its liquidation. So it was an absolutely horrible investment. And basically what happened is the people who invested in Pets.com were the miners, right? But the people who sold all this other stuff, who were they? That was any of the internet companies. So like maybe not so much Google back then, but Yahoo and all those businesses that help people navigate to that website. So what we're looking for when we invest in these types of industries in this strategy, so this would be when you buy individual stocks. Here, what we're trying to do is we're trying to identify companies that maybe don't invest directly in like they don't go and put AI at the top of their annual report like some companies do. But what they do is they look at it and they go, well, we can just, if I get rid of this, we can just offer AI through our software that people are already using, and we can charge more. So how does this actually work? Let me show you how this works. So typically, and I'm just going to do this on the fly, I was thinking about it today, but typically the way a company makes money, and I'm going to use Microsoft Office as the example. So Microsoft Office is right here, right? You know it. It's now called Microsoft 365. Let's say you pay Microsoft, I don't know, we'll do round figures. Say you pay them $10 a month for a subscription and you get all your whiz-bang tools. Of that $10, probably about 5 of it is, let's say, we'll say 6. This is what we would call profit or gross profit, right? This is the profit that the company makes. So this would be $6 on every version of this. That means that about $4 are buried in costs, right? So here we've got costs. And this might be things like, I don't know, like the cost of, I don't know, a commission that they have to sell. So they might have to sell, sorry, that should say 4. Let's put a 4 there. That's you'll get the idea. So this might be a commission that they sell to other businesses to sell it. It could be the cloud computing that they have to do. It could be, you name it, whatever, it's there, right? So there's other costs, and these might be, say, 2 and 2. And you can eventually do this, and you can come out with what we call the economics of a business. So most people investing in AI right now, they're thinking, whoa, I'm going to go and get me one of these AI stocks and see if it does anything cool. What you can do, however, is you can find a business that is already operating and can already make money from its customers. And so an example of this would be like Microsoft. I'll just keep it like that. Would be an example like Microsoft, or as we saw before, Canva, because I would just pay more to have the AI features. So now instead of $10, let's go like this. Let's say they charge $20 for the AI version. Microsoft AI, right? And then now we've got the costs. So the costs before were $4. Let's say it's now $8, right? We're still sending 2 here and we're still sending 2 here. But now we have an additional $4 going to a company like OpenAI. All right, that's the company that creates ChatGPT. So it's getting $4, right? But now we can see that Microsoft has gone from making $6 to making $12. So this is a better package for them to offer their clients than the $4 model with the $6 profit. So this is basically the picks and shovels moment for what we're seeing now in AI. What we are seeing is we are seeing companies just switch on OpenAI, and they're plugging in an AI version that they have to develop, that they don't have to maintain, that they can just use in their core offering, like up here, and they make a bigger profit. Obviously, you're thinking, you know where this is going. In 5 or 10 years from now, the key value creator is OpenAI down here. So what's going to happen is eventually OpenAI is going to say, no, Microsoft, we don't want $4, we want $10. And they will turn the screws. But this is an illustration of how this is, in my opinion, almost an easier way to play this theme. Rather than trying to pick the winner, which can go horribly wrong, just pick the companies that are already going to benefit from it. So how would this show up in a company's financial statements? Well, in a company like Microsoft, what you will see is you won't see a separate thing that says AI. It would probably just say Microsoft Office revenue. It will say Microsoft Office revenue up 20% or 40% or whatever it is. And that's what you'll see because they're starting to sell the AI version for a higher profit. And that's basically it. So a lot of companies that are coming out and putting buzzwords in their products and marketing and saying we're the future of AI. There's one in Australia, which I don't have to name. These companies, unless they can prove themselves, are wildly speculative. Whereas these companies that are already benefiting are here right in front of us. So let's bring up some more ideas. Here we've got a bunch of different companies that I outlined recently. So we've got NVIDIA example. NVIDIA just recorded a humongous profit increase, something like 600%. We've got AMD, which is a similar business in semiconductors and microchips. Microsoft will have assimilated OpenAI by then, maybe, yeah. Microsoft, which I just mentioned. So that's a way to get exposure to technology and dominance of these huge platforms without investing in the speculative end. We've got Alphabet, which owns Google Bard. Bard is available for free at bard.google.com. So let's ask it the same questions. How do I invest in AI stocks? I need to do a capital there. Let's see what it says. All copyright to Google Bard. Let's see. It's thinking. Okay. Whoa. Invest in individual stocks. It's even given us recommendations. Invest in individual stocks. So this means buying shares of individual companies that are involved in development or use of AI. Joe Bloggs, you said, where's Palantir? I'm sure it will be on this list. There it is. Palantir features on just about every single company's list of stocks or analyst stocks. It's a business that I think could be on your watch list, and at least it probably should be, Joe. It's just a business that I probably don't know as much about as some of the other businesses. And so here we go. Invest in individual stocks. Invest in AI ETFs. And here we've got a few. Robo, that's an Australian one. The rest of them, who knows? AI is a rapidly evolving field. Do your research. Understand the risks. Only invest money that you can afford to lose. That's a classic line that you see on the internet everywhere. That's not investing if you're going to lose it, I guess. But anyway, so we can see that's Google Bard. You can go and play around with it. I would say it's less accurate than ChatGPT and GPT in general. So anyway, you can see all these. We've got Tesla, which is self-driving, Meta, which I've mentioned, Altium, which I'll come to in just a second, and we've got, of course, the ETFs, which is the safer way to play. So Joe, are you saying you're dollar cost averaging into Palantir? That's interesting. Tell me more. Okay, so let's zoom in on an Australian company and let's go back to this thing. This is not supposed to say Levi there. Let's go back to this strategy right here, because we just did the Microsoft example of how you can just, say how I called it Lynch Levi. The quote was from Peter Lynch and the Levi Strauss was his subject. So there's another approach you can take called guerrilla game. And this might be something that you're talking about, Joe Bloggs. So keep that in mind. So in Australia, we have a company called Altium. Now, I brought this company up because I wrote about it a few days ago on Rask, but also because it's a really interesting company. So before I get to that, actually, Altium creates the software that designs these green things. They're called printed circuit boards. So these things go into everything. They go into everything all around us. I mentioned this last week. But they recently did a test, or one of their competitors did a test called Cadence Systems, and you could add Cadence Systems to this list. And basically they said you compare the human design versus the machine-assisted design, right? And you can see that it takes 3 days for someone to design one of these green things, a bit more complicated green one. And you can see it takes the machine 75 minutes and it costs less to make. So this is, if we go back to Steve's quote at the very top of the show, if we go back to the Neos and the Luddites, we've got the Neo over here and the Lud. So we've got, should be, so we can see the enabled solution here and the thing that doesn't have it here. And this is exactly the same way, right? As far as I know, Cadence Systems isn't designing this brand new ChatGPT. It's just using the tools that are already available to them to do this, to offer this solution. And that's why they call it Allegro AI. And you can see it there. So this is a competitor to Altium. But what I've realized in the last few years is Altium's obviously stepping up its game to invest more. But the guerrilla game approach is as follows. I've covered it a little bit on the show. But the guerrilla game approach is based on a book. And I'm just going to reach over here and grab my book. I've got my Google Home Mini. Hopefully it doesn't go off while I grab this out. I've got a big stack of books, and naturally guerrilla game is on the bottom. So let's see how that goes. Okay, I've successfully retracted the book. There we go. Okay, this is the book. I'm going to show it to you. I've got the hard copy version. This is a fantastic book if you're interested in investing in anything technology. And the book talks through a lot of the things that I'm just about to mention. In fact, it does a better job of it. So go and check that out. So here, what we can see is an industry where there are multiple companies winning. So we've got Altium, which is the Australian one. Here we go, bring up my chart rather. We can see we've got Altium, which is the Australian one. We've got Cadence Systems, which is a US one, and Autodesk. Autodesk recently tried to buy Altium, but Altium said no. And what we can see is that all of the companies have performed very well. Over 5 years, the minimum return is 81%, and Altium's also paid big dividends. So what we can see is all companies looking like they're winning. Obviously, I don't look at a share price and go, oh, that looks like a good company, because that's such a silly way to invest. It's just to look at a share price. It doesn't tell you really anything. But I know these companies, and over 5 years, it tends to become more representative of the performance of that business. And what we can see is all of them are winning because they all sit in this part of the market where they can benefit from more people adopting cloud technology. So just like there's AI now, over the last 10 years, the big play, the big theme to identify has been cloud-based technology companies, companies that move their software to the cloud because it is such a better way to do it. So in the guerrilla game approach, you're not trying to pick this one or that one. What you're trying to do is you just take all of them in the beginning. So let's say, for example, you have $10,000. This is general advice only. Let's say you have $10,000. Instead of just going, I think it's Altium, I'm going to put $10,000 in that, and then Altium just goes like this. What you can think about doing is you can split it up. So you might have 3,300, say, or a different type of figure in all three of them. And then in a couple of years, as time goes on, you start to focus on the companies, you begin to realize, hold on a second, one of these is growing much faster than the other one. So what you do is you take that off the table, you take your $3,000 off, and you just make it whatever you've got, and you consolidate your position into the winner. Now, this sounds very easy to do, and it's probably the easiest way to invest in these types of industries, but it's not exactly simple. So I really encourage you to get the book if you're an individual stock investor. But so the best thing to do in this approach is to follow these very simple rules. Okay, these are just three. There are more in the book. These companies, they call them gorillas because the gorilla, as in my example here, the gorilla ends up taking all of the share. So if this big blue bit here, the light blue, is the entire value created, in that industry, what we tend to find is the gorilla, which is the dark green here, eventually grows to take most of it. So it ends up taking all of this. And the little chimps, they just take like little slithers around the outside. And so what we see is the gorillas, as you identify these as they're growing, that's where you capture most of the value. So if this becomes this outer line, that's when you know you've made a lot of money. So an example of this would be Amazon. Amazon started as a little chimp, just like everyone else in the .com era of the 2000s, and then it began to eat everyone's lunch. It started to dominate in-store purchases, like at retail shops. Everyone started shopping online. It started taking share away from eBay and from all of these online marketplaces, and it started to gobble everything up. So this is an example of how this is playing out in action. But what are some of the signs that you know you've got a gorilla and not a chimp? The first one is it's just growing revenue fast. It's not one of those businesses, what my friend Andrew Page would call a gunner company. It's gonna do something. It's gonna do this. It's gonna do that. I'll give you a really quick example. I won't dwell on it too long because it gets quite intense when people talk to me about this. But this is an example of an Australian company, which could be one of those gunner companies, or it could turn out to be a great company. But this company here is called Brainchip, and it's a company that is reporting really wide losses. So you can see the loss there of $17 million for the half year. So the question then becomes, well, how much money does it have in the bank? If it's losing a lot of money, and it's only got $21 million in the bank, it's going to have to do a capital raising unless something miraculous happens. So that's an example of a company that could become a gorilla, but we don't know. But it's definitely not growing its revenue fast. So for me, that's a really important sign. The second thing, and this is the really, really important thing, this is the most important thing, is that the company has to be developing the standards for that industry. Let's go back to the Amazon example. With Amazon, it made same-day delivery a reality. It gave free shipping. So then every company in the world thought they had to do that. So Mercado Libre in Southern America did it. We've got eBay trying to do it now. We've got all those online stores trying to offer something similar. Kogan trying to do its version of Prime. All of these different things. So it developed the standards. In Australia, a technology company that's doing this is Xero. Xero is setting the standards for the industry, and everyone is so far behind, they're not even bothering. So this is how you see this happen in practice. Obviously, everyone was like, well, Amazon's not profitable. And then they said the same thing about Xero. And then all of those shares have gone up way faster than any of them could comprehend. Finally, the final thing is those companies tend to become stronger and more safe as they get bigger. A lot of people think when they invest this way that a company, as its share price goes up, gets risky, because we've got this silly thing drummed into our heads: buy low, sell high. Buy low, sell high. I mean, how silly is that? If you buy something and it's good, why sell it? It's so silly, but it's something that everyone in our industry seems to repeat ad nauseum, and it drives me insane, because oftentimes the best companies in the world shouldn't be sold. You don't know in advance, of course, but when you find one of these companies that can meet some of these standards and grow, if you think about it, Amazon today, even though its stock price is up 170,000%, it's actually it's actually safer than it was in the year 1999, even though it was much smaller then, right? So that's kind of the idea. Stuart, you've just dropped something into the chat. You said Ordinate is a similar example. Ordinate is definitely the most gorilla-like in Australia. So Ordinate makes this product called Dante, which is basically software that runs on any type of audio-visual equipment. And they create the standards, and it's basically like the internet powering audio-visual around a shopping center, at a stadium. If you go and watch a Taylor Swift concert, chances are it's running through Dante. And it's trying to do that too, and it's just reached an inflection point. So this is the guerrilla game approach, probably more risky than the other ones, because you're actually taking a bet on which stocks are going to win, but you're doing it in a way where you don't know the answer in advance. And I think that's really important. So let's just recap what we've covered tonight. Some companies will be AI and some companies won't. Just don't be fooled, because you will lose money if you're sucked into one of those companies that say they're going to do something and they don't do it. So some better ways to about it is you're probably already an investor. If you've got your core portfolio set up, probably already an investor in AI. You can use thematic ETFs in the satellite. You can use the Lynch Levi method, which was this one right here, which is just about finding companies that you're not trying to pick the winner. You're just trying to find a company that stands to benefit. The other one is the guerrilla game approach, which we just covered with an example like Altium or Ordinate here in Australia. Ordinate goes under this ticker symbol, by the way. This is Ordinate, and you can see it in action here. And then there's finally the hope and pray approach, which a lot of people, no one in the Selfwealth Live community would do ever. But the hope and pray strategy is basically, my mate said something, so I'm going to invest in it. Or I heard on the news that ... Or someone on Twitter said ... That's not a strategy. That's just pure speculation. And so be very careful with companies that just say that they're AI when they're not, because I've seen it 100 times over where people have lost so much of their family's money by doing things like that. So just approach it sensibly, build your watch list. Obviously, I'm invested in some of the ETFs that we may have mentioned tonight, but I'm not invested in any of the individual stocks off the top. Xero, of course, Promedicus, of course, my two largest shareholdings. But Paul, you said, can I have another look at the ideas slide, please? Absolutely. Where are the ideas slides? So here. So these are just ideas to pop on your watch list, Paul. There was another company that I mentioned. Why don't we make it 11, which is called Cadence Systems. If you're interested in Altium, you should be interested in Cadence. And if you're interested, that's not how you spell Cadence. Never mind my English. You should also look at Autodesk. And if you're interested in that, you should look at ANSYS. I can't remember that. I think it's ANS is the ticker symbol. ANYS, I think, is the ticker symbol. ANYS stock. This company. So you should look at this company too. They all do slightly different things, but they're all involved in a similar style industry. And they're all kind of betting on that Internet of Things, like This Google thing that I've got right here that I'm holding up, let's see if you can bring this up. This thing runs my internet. We've got about 3 of them in the house, but it also plays my music, or it just listens in and gives me really weird advertisements when I'm not expecting it. But there's a chip inside that, a microchip that might have been designed by NVIDIA, that might be built by TSMC, that's owned by Google, and that serves me things based on Google Bard or voice assistant. So that's how the ecosystem comes together. Now, of all of those businesses, well, you can invest in all of them. So they're all pretty high quality businesses. Um, to O'Brien family, you said you've joined the poll. I just joined, and the poll is at 50-50. Let me just have a look at this poll really quickly. I don't think I've got it up in front of me. What's this one? Oh no, that's the podcast with Steve Sammartino. I'm going to bring this up. Look at my England there. Let's go over to stuff. I don't actually have the poll in front of me because I use a different bit of software to. Let's have a look. What was the poll? Are you invested in any AI companies or thematic ETFs? Well, definitely invested through my ETF, Rob. So there's well, it's 50-50. Wowzers. Okay, so there you go. So I've got a couple more slides. Here's my quote for this evening. One man's bubble is another man's growth stock. And we could just say one investor's bubble is another investor's growth stock. And we've got a little meme here to guide you off into the distance. And this person who's saying it's the next big thing, and they're looking at a bubble. And the big blob says it's a bubble. And they're like, it is? Hopefully I don't know if we're in bubble territory. I don't actually like that word too much. But what I can say is that when we see industries, what we typically find is a very distinct pattern. And it goes back to the tulip mania of I think it was the 1700s. But what we typically find is we see this innovation cycle and hype cycle, and then it goes down, and then it comes back like that. And then it goes into the S curve. And what we could be at right now, I'm not sure, but what we could be at is this period, or we could be in this period. But for it to become a bubble, it generally has to inflate off into the distance, and valuations have to become more extreme. I think if we look at, say, NVIDIA, come on, click. There we go. Thank you, Google browser. If we look at NVIDIA, because yes, its stock is up a huge way, it's actually reported huge profits along the way. So if we look at things like, well, this is not normal, but if we look at some of the price earnings ratios, it's actually come down a long way. So if we look forward, let's go forecast from analysts, and let's have a look at the earnings in the future. So we can see earnings out into the future are going to be a lot higher than they are today. So this company's actually got the growth to back up its hype, but some companies definitely do not. Their share price is going up for no reason other than it's going up. So Brian family, thanks for joining the chat. All right, guys, I've probably got time for 1 or 2 more questions. If you want to ask me questions, don't forget, we'll be back same time, same place next week. Next week, what was my topic? I have a very fun topic for next week, and I can't remember what it is now. To get you all excited, I can't remember, but it's going to be awesome. What comes next for Selfwealth Live? I know Rob's excited. I'm excited. It's still going to be streamed wherever you get this stream. So Harry says, great episode of Rask Live. So wherever you get this stream, if you're watching this on Selfwealth's YouTube channel, if you're watching it on Twitter, if you're watching it on LinkedIn right now, it doesn't really matter where you get it. It'll still be there next week. Like I said, we've got some huge guests. I'm going to put down all of these names. Peter Thornhill is one that I haven't spoken to, but my co-host Kate has. I'd love to get Bill Ackman on. Bill Ackman taught me a lot just by reading his stuff. It's going to be huge. So, here's a question from O'Brien family to Rob. Are you invested in AI, Rob? That is the question. So it's not a question for me. It's a question for you. So that's a good question. Or are you in AI? So we've seen some really interesting things and some really scary things from AI, obviously. But I'll just maybe conclude with this then. What everyone should be mindful of is that as the world goes forward, it tends to become a better place. Now, I know it's very easy to draw the scary narrative. This will change the world. That will change the world. Bitcoin is the new global standard. The currencies are being inflated away. There's a global debt ceiling. It's a global financial crisis. It's a dot-com bubble. Go back hundreds of years to tulips will solve everyone's problems. Like some crazy stuff has come up over our lifetime. And everything that comes up on the horizon that is scary, a war, whatever, everything that comes up that is scary on the horizon seems to follow those famous words that it's different this time. And it almost never is. I'm very fortunate. I'll be catching up with Mike Kemp tomorrow. And Mike is one of the most well-read people I've ever met. And I hope that he will drop some wisdom like that on me tomorrow, because whenever I speak to him, he seems to do that. And even though we've had all of these crises over the years, and some of them have been genuine crises, the stock market has still gone up. And the reason I believe is that the stock market is the place where you go and you benefit from optimism. You benefit from people solving problems because we have capitalism to protect that. Capitalism rewards people for taking risks and solving problems for other people that they can't solve themselves. Now, it's got to have some bumper bars. We all know that. Capitalism's got to have some bumper bars. But at the end of the day, that's what we're doing with the stock market. So, yeah. So, here's a good one. Goon, you should reverse your image so things are not a mirror image. I should do that. Good one. I will do that for next week. The future is Skynet. Yes, there is, Jason. There is a Terminator on the horizon. What have we got? Harry, you said, out of curiosity, what AI ETF are you invested in? Harry, I have the broad market IVV ETF. Okay, so Rob will be interviewed on the Australian Investors Podcast to answer your question, O'Brien family. We'll be back next week, next Wednesday. I'm going to put everything down that you said. It's going to be huge. Please, doesn't matter where you get the live stream. Next week, we will be here at 6 p.m. It's going to be incredible. I've got a few secrets up my belt. And if I remember the content title, I'll send that over to you. You will receive notifications in advance. Thank you for joining us tonight. Thanks to Rob for being behind the keyboard. I'm looking forward to grilling him tomorrow. And thank you, everyone, for making time on your Wednesday night. I hope to see you in person at one of these events that we're doing, or just see you next week. Bye, Araya. Bye, O'Brien family. Goodbye, Paul. Everyone that said g'day tonight, Benny.